it's going to apply on both booms and crashes. It's going to apply on currencies and everything. The first thing, besides, what I've been teaching you before, that you have to know, besides market structure, besides knowing your direction, the first thing you have to know as a trader is how much am I having in my account and how much of the risk am I willing to put per trade, right? Knowing how much to put per trade and knowing when and where to cut your losses is going to help you how in discipline, right? Once you're a trader and you have discipline and you know that you follow your own rules, then you're set to go. Even if you lose a trade, sometimes it won't even hurt you. And then at the end of the day, you don't have to be that type of trader who opens charts and then just enters just because you think it's buying, you buy, just because you think it's selling, you sell. It's better to blow with what you think is your best setup than to blow with no setup at all. And then at the end of the day, you'll be like, I should have analyzed. Maybe I should have gotten something. All right. So we have pairs that we are used to. We have those booms, we have those crashes. Right. So today I just want to teach you a simple trick. Even when you come to currencies, I just want to teach you a simple trick that I think will make you withdraw on a daily basis. Right. I'm not going to sound professional because some of you, once we start sounding professional, order block, hey, swing structure, demand and sell. Some of you, you start seeing stars. You start feeling like maybe we are preaching or we are talking of something that's non-existent, right? So I want you to listen to this carefully. I'll teach this in the most simple and effective way that I think I can. And I know for someone it's going to make sense. We all want to make money, but sometimes we don't have time to study 24 hours, to study all day, to study at least maybe 3 hours a day. Guys, all right, I'll show you this. Right. If there's something that I will never ever leave when I'm explaining Forex, and that thing is market structure. But let me explain it in a simple way and how to enter trades like that. Some of the people here, you ask me, Sekuda, do you take your trades in M15? Do you take your trades in M1? Do you take your trades in H1? Well, basically, most of my trades and my entries that you see, I'll be showing in M1 chart. And then sometimes M15, I have never showed you H1 or anything. H1 is what I use to determine my direction. H4 is what I use to determine my direction. M15 is for my entries, M5 is for my entries, and M1 is for my entries, but I rarely use M5. So what I do is this. Since I know that market structure, right, is highs and lows, highs and lows, highs and lows. Instead of waiting for 4 hours or for the 4-hour chart as well to play out a proper setup, what I do is I usually just go to my M5, M1, and M15. Right. So the first thing I have to notice is what is happening in my H1 or in my H4. If my H4 is selling and my H1 maybe is also selling, let's say this is my H4 or this is my H1, what I would want to do is, if this is for crash, right? If this is for crash, I don't buy crash. Well, maybe once in a blue moon, but I would want it to see, I want to see it buying, right? But as I'm seeing it buying, it's not like just because it's buying, I'm selling it. I want to see it following a certain trend. Like I want it to be this smooth here, this smooth here, right? So now we are going to cut out all this, and all this. We're going to focus on this part, right? So I'll redraw that part so that we utilize the screen. So this is my H1 and this is my M15 or my M5. What I want to see is I want to see it buying following a certain trend. But remember, we don't trade lines, right? As for me, I'm a smart money trader, or I trade using smart money concepts. We don't use trend lines because sometimes trend lines they they are the most easiest way that you can get hit while trading, right? So what I want to see is here. This is the part I'm more focused on. Some people say, oh, order block, oh, gap, right? Today I'll explain them in very simple terms. Let me redraw this. Now we know that we want to focus on this and we want to see something like this, right? So after witnessing this, I now have to relate back, right? So this is my H1 and this is my high, right? With this method that I'm going to teach you, if you start practicing it today, trust me, you're going to see a very great change. So what I want to see is a little consolidation here. That first consolidation after my high has been made is what I'm going to mark, right? I'll tell you what this is. So after that, remember we get a low and we get another high. But remember, we have that M15 that we are hunting for it to reach in areas like this. These are what we call our points of interest. So we first have to have a high. After that high, we must then follow to see if we have some sort of a mini consolidation that we are going to have. Then we make a low, and then we want to go back into that area. Once I reach in this area, that's when I tell you massive spikes are coming. Why? Because when it gets here, it reacts and then it falls. I hope I'm speaking sense, because whatever I'm saying here, I'm going to prove it. Not once, not twice, but more than 10 times. Right. So in your books, I want you to write this. Oh, I just want you to draw this image. Now let me draw it neatly because now I'm not using my mouse. So we want to have a high. After that high is made, we want to see what looks like a consolidation, and then it falls. We make a low. We want to trend back to that high, to that consolidation, and we mark that zone. As soon as we get in that zone, we start pumping sales, and then we fall. Right. So you can just write this in your box. Then we want to have another scenario. This other scenario will require me to explain what we call gaps, but I will explain them in the simple and most effective way. What is a gap? Or what is not a gap, Amazango? Gap You see, we have candles. Each and every candle that we see in the market is what we call tails. And in each and every market, we have what we call a balance between buyers and sellers, right? So a gap usually is created when there is no balance of buyers and sellers. And sometimes it's very necessary for us not to have that balance of buyers and sellers because we have to move from certain points with a force and it. That's why you see some trades, once they reach a certain point, they just either go up aggressively or go down aggressively. Sometimes you can even see a series of green candlesticks with no red candlestick, or sometimes you can just see a series of red candlesticks with no green candlesticks. So in a scenario whereby you're seeing green candlesticks and there are more, then you know that obviously our buyers are overpowering sellers. And when you see a series of red candlesticks, then obviously sellers are overpowering what? Buyers. But you just don't guess that they are now overpowering. Our candlesticks, they have to have a sort of formation that they have to show us so that we know that this is a gap and this is not a gap. So for you to know that this is a gap, each and every candlestick is meant to form a balance between buyers and sellers in the market. So this will be our candlestick number 1 here. We don't care about candlestick number 2, whether it is a very, very big tail or whether it is no tail or whether it is a little tail. What we care about is candlestick number 1 and candlestick number 3, right? So if you see from candlestick number 1, we have a tail, and if you put a line on that tail, candlestick number 3, if that tail merges with that of candlestick, if that tail of candlestick number 3 merges with the tail of candlestick number 1, we have a balance of buyers and sellers. But if we get a scenario whereby our candlestick number 1 doesn't merge its tail with that of candlestick number 3, we leave what you call a gap in between. And no, I can't say no matter how, but as far as your trade goes, it has to come back to that area and then fill that gap and then either drop down or continue to go where it goes depending on your market structure. Right. So now someone will say, but there are many candlesticks in the market. Which one do I choose? You start choosing from the one that you see a gap at, right? As we proceed, obviously not today, and as we introduce the fib, you're going to see that some gaps are relevant and then some gaps are not relevant. All right. Now let me do this. So we've seen a high, right? Let's go to a scenario again whereby we have a high. And just because when we make a high, we have to move from that point with a force. Sometimes we leave gaps in these areas. So once you spot a gap, you wait for your low to be made, and then you target to go back to that area of that gap. Once you get in an area of that gap, you wait for it to be covered at least 50%. So you wait your trade to cover 50% of that gap. Once it hits 50%, you can even put 50 lot size if you have the money. You can't put 50 lot size on a $10 account. But what I'm just trying to say is you start putting at least bigger lot sizes. Why? Because you would have reached your point of interest. Right. Now, the other thing that I'm going to show you is what we call order blocks. But allow me, please, guys, allow me to say these ones, they are very effective, and once you master them, trust me, even you can have 10 trades, you can lose 3 trades, sometimes none, sometimes 2. All right, once you know how to utilize them, then you're set to go. So what is an order block? An order block is a candlestick that you see before, soon after before, either you reverse or change direction. So if we are saying we were in a buy market, the last buy candle that we see before we started heavily falling is an order block. But not every candlestick you see is an order block. As for me, I use order blocks that break structure. These are the most effective order blocks that break structure. And what do I mean when I say that break structure? I understand each and everyone in this Zoom session has done some of the videos that I've posted on YouTube about structure. Remember, if a high, a low, a high, a low, a high, a low, a high. And the moment that we break the previous low, that's what you call a break-off structure. So you can have a last buy before you sell there, just as much as you can have a last buy before you sell there. But now it depends on which one you are using. Why? Because we want order blocks that break structure. Or we also want order blocks plus a gap then equals to entry. Meaning, those gaps I've been teaching you about, if you see that you have an order block just above your gap, fear no entry when your setup is like that. You attack it massively. Or when you see that maybe just soon after your order block, there's a gap, because some order blocks, they can go below gaps, right? Then you attack as well. So let me really stress on this issue of order blocks. I think I haven't stressed it enough. So if we are in a buy market, that last buy before we sell, we mark it. In the event that it had broken structure, we mark it, and we wait for our price to come back to that area, and then we sell. But if you are selling from an order block, sometimes you can also make another order block that you can come and run away from and then sell. At the end of the day, you're having highs that are flowing down, and then your market structure is now making sense. So let us go to the real world charts and see what Sekuda is saying and verify if really what I'm saying is what exists in the market. All right. So this is my MT5. Yo, I'm used to using trading view MT5 here. Quantity, it doesn't look nice, but let us just use it. So, ladies and gentlemen, what you see here is a buy, right? And we were uptrending. You can see we have a high here, we have a low, we have a high here, we have a, let me mark here, we have a high here, we have a low, we have another high here, right? Now, some people would argue and say this is a low. So not to confuse people who just did, I think some of my students who I do mentorship with, they are here and they know how we treat scenarios like this. But for everyone, I'm not saying what I'm teaching you is wrong. Let me just flow with you. So once we see that we are in an uptrend, we don't have to specifically come and break these previous lows. But once we see that we have broken a low, then that means we've broken structure, right? But I want you to also look at a scenario whereby we have a change of character here, which can represent our breakout structure in smaller time frames. Once you broke this structure, which one was the last buy? Which one was our last buy before we sold to break this small structure? We can see that is this candle here. And what happened? Price, after breaking structure, came back into that area and then fell. Right. So before we even broke this structure again, which one was our last buy before we sold? We can see that it's this one here, right? And price came back in that area and then it fell, right? So these are areas that we call order blocks. Those are the order block areas. And as you can see, I'm picking each and every order block that is breaking structure, right? So just because this lesson is a short lesson, I understand some people go and replay. I just want you to look at more points like this one. And once you master them, you'll be good to go. Okay. So I've started by explaining the order blocks, which are the ones that were the last on our presentation. So now I'll go to the theory of consolidating, coming back to that area of consolidation and then falling, because I understand some people need to understand. So we were in an uptrend. In that uptrend, what do we see? We switched from an uptrend going to a downtrend. Which one was our first consolidation before we started falling? It's here. And what does price do? It comes back to that first area of consolidation. Maybe if I go into M5, you can really see the consolidation that I'm talking about. Yeah. You see that after that high was made, we had a small consolidation here. Here. It's the small consolidation that we first saw. And price did come back into that area and then it fell, right? So we can look for another point like that. We made a low here, and before we made another low, just after we see that we have an area of consolidation here, we have a low, an area of consolidation, a confirmed high here, and then what does price do? Price comes back to that area of consolidation in the future here, just taps it and then it moves up. So now I'm going to be presenting on gaps. Remember, I talked about gaps and what they are. So by this example that we see here, can I really see a gap? Is that I can say this is a gap? Yeah, I have a gap, but it's not convincing. You won't understand it if I decide to use that gap. So maybe you might think I'm running away from it. Let me just go back to it so that you see. So I was seeing this gap here. Here, between these two candlesticks, we have a gap, which is this one, this small gap here. As you can see, price came back in that gap, filled it, and then it went up. We have another gap here. As you can see, we have a gap here. And what does price do? Price comes taps in it, buys. Although it fell, it respected that gap first. So imagine it's a boom, you would have put it on a what? On a sniper entry. So I'm just praying I see another one last cape. This cape is too small, but it did work here. We can see a very small, okay, it's here. We have a cape here. And if we drag it up to this area, did it work? Yes, price came taped, respected that area. Yeah, and then it went up, you see, and then it fell. So generally, these are simple tricks that you can use on a daily basis, especially if you use your M5, M15, and M1. You'll just be getting sniper entries, sniper entries, sniper entries, sniper entries. All right. So yeah, those are the little things that I had to share. Um, I don't know if there's someone with a question, you can raise your hand, and I'll unmute you so that you ask. We only have around 5 minutes. You can just raise your hand. Once you raise your hand, I'll unmute you, you ask, and then we see how best we can help each other. Okay, we have a hand. I've asked you to unmute yourself at the bio, at the knee.
Yeah, good evening.
I'm good, how are you?
I'm fine. Thank you for the insight. But my question is in respect to the gaps, are we considering only the blue candles or the mixture of both?
All right. First of all, I'm sorry. I think my candle colors are not up to the standards that some people use. So let me try to do this. Let me try to put yo. I think I like using blue a lot. Each and every template I'm choosing
Okay.
blue.
All right, fine, fine.
All right. So, but generally we are using the candlesticks like here. You see that our trend is falling. These white
Yes.
candles are representing my red candles in the charts that you are used to.
Yeah.
So I would have to pick a gap between those candles. So if I'm picking a gap in a bearish market, obviously I'm going to choose bearish candlesticks, which are in turn going to be red. And if I'm choosing
Okay.
candlesticks in the bullish market, I'm going to choose gaps from the green candlesticks.
From,
Yeah,
okay, from the three bullish candles and from the, if you are considering an uptrend, from the three
yeah,
bullish candles, or for itself, from the three red candles, say bearish candles.
yeah, exactly. And then
Okay.
the other thing when you're marking gaps, unlike marking order blocks, etc., you mark using the wicks. You don't separate the body
Okay.
from the tail. Yeah, you mark using the wicks.
2 weeks.
Yeah.
Okay. 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 Thank you. Thank you for the clarity.
All right. Eric raised his hand. I'll unmute you. Okay, I've unmuted you, Mr. Eric. You
Oh,
can.
I said good.
I'm good. How are you?
All right. For the concept you've just shared, it was very clear. But then, how do you mark your targets? For instance, on the is it the next zone of resistance in the case of a sell? I'm not the target when you do the short time frames. How do you really target? Because sometimes you do make a profit, but then you hold too long, ending up in losses. Good to see clarity on that.
As for me, I always target the previous highs and the previous lows. Once my trade gets there, it's
Even on the shorter time frame.
even in shorter time frames, I exit.
Thank you for that.
Okay, can we have another question? We have about 2 minutes left. A minute? The whole people don't want to ask. Well, if you check the crushed 500 that I gave you, that's the same concept that I used. And I used the cape on M5. You can actually see it's falling hard. Even up now, it just threw us another one. It's falling very, very hard. So Tatenda, you can ask.
Hello, how are you, Segude?
Yeah, I can hear you, but I think your mic is a bit low,
A little bit far.
your volume.
Okay, I want to ask on the change of character.
Yes, you can ask.
So, like a change of character, it's we are breaking the previous. If in a uptrend, we are breaking the previous higher low, is it?
A change of character generally
Yes.
doesn't mean it doesn't mean your law has been broken, but it just means that what you see like a law is actually like here. This okay, let me do this. We have high, low, high, low, high, low, high. We have something that looks like a high. That thing is what you are looking for. And